expectations because you talked us both up here, right?
Extremely high.
You're not a newbie to the FinTech gathering here by the DIFC. I know you've grown a lot and you've got 4 acquisitions under your belt today. How are you looking with these acquisitions to shake up the financial industry? Does it give you more weight in which to do so, Arik?
Yeah, so first of all, we're 3.5 acquisitions in because the last one, the 4th one, is about to get the final regulatory approval, hopefully in Europe in the next several weeks, and then it will be completed. That will bring the company into a very large scale, operating completely globally. And I think what we learned over the years is that in order to be extremely successful in financial services, you need a very large scale from volume, number of clients, perspective, and these type of things. And I think all these different things that we've done over the years to grow the company extremely, fast was in order to get the scale that we want, in order to be a stable and a very long-term player in this industry. Because you can look at it a little bit like a Pac-Man game. If you're not going to eat somebody, somebody's going to eat you. So we prefer to be the one that is eating and not to be the one that is eaten.
You originally started off as a mobile payment company, right? But you saw that there was a space in the market for a wallet. And I'm curious, in this sphere where you have a base, homegrown roots in Tel Aviv, you made a decision strategically to come into Dubai, and then you did some landscaping where the growth is around the world. Let's start why you saw Dubai as one that needed to be a large flag that you planted with Rapyd.
So Dubai is an interesting story because if you look at all the different countries that we operate in today globally, and from the day that the company started in 2016, we basically pick the countries where the markets are that we can do significant business immediately out of the gate. I think the only country that we picked because of a vision that these days is translated into reality is Dubai and the UAE. And I landed here for the first time. It was October 2020. It was COVID. There was pretty much nobody in the city, and it was the first time ever I was here. But after being here for 24 hours, I basically came back to headquarters, and I told my team, I said, we have to open an office in this city. It's like unbelievable. This is the city of the future. And they told me, but what's there? Like, where are we going to bring people from? Why do you think there are engineers, product managers, business? And why there? We have so many other places. I said, no, we have to go there. That was basically my gut feeling. It was October 2020, and then, we fast forwarded and we opened an amazing operations here in Dubai. We have around 100 people based in the DIFC. We're super happy with what we're building, and we're using this as basically our entry point into the entire region.
Okay, the region in your seat today, I know the vision of Dubai is to say it's a market of 2.5 billion people because it goes to Southeast Asia, reaches into Africa, and you have a wider market in the MENA region of 300 million. Where do you leap off from here for you to capture the growth you're looking for?
So it's important to understand how we're structured. So we have a big office, for example, in Singapore that covers Southeast Asia. We have a big office, European, UK, Latin America, we have Mexico, we have Brazil, we have now Colombia after the acquisition. We have, of course, the US, Miami, San Francisco. And from our perspective, Dubai is basically the place in order to take over markets such as Saudi, Egypt, and others in this entire region. And it's a very interesting connection into Africa because from our perspective, we want to manage our African operations also from Dubai.
Yeah, I think it was the airlines and the ports, traditional pillars that built that relationship with Africa, and you can see the G2G relations that have been the benefit. There's probably not a lot in this audience that knows the concept of Startup Nation in Israel, and in my course at NYU Abu Dhabi, it's a key pillar. If you look at the Abrahamic Accords, and then taking that Israeli DNA for like the startup chutzpah, if you will. How does that work in your organization, that DNA? Because you had the most IPOs in the technology sector than anywhere else in the world. And I think it's interesting to share that and how it applied to your company.
So I think it's deployed extremely well in the company because I'm going back in time to 2016 when we started the company. We were 3 co-founders coming from cloud computing, zero experience in financial services. Like literally, I had a credit card and a bank account. This is what I knew in financial services. And I thought it's very easy. I just wanted to build some kind of an application in that space because I thought it's easy. Fast forward 8 years down the road, I understand how complicated financial services are and why it's not just a 16-digit credit card number and the money moves. But what we learned over time is that a lot of people in this industry, they have 3 sentences that they constantly repeat. You cannot do that. Nobody's ever done that. And why do you think it is compliant, right? It's like pretty much the 3 sentences that you constantly hear. And I think that...
No matter where you are in the world.
Yeah, anywhere in the world, by the way, anywhere. And especially when you hire people that worked in other companies in payments or in banking, they always come up with these same sentences. And I think that what we learned, you know, as a company is that you have to challenge it constantly. The fact that nobody's ever done that, it doesn't mean it cannot be done. The way that you want to do something differently than whatever, pick a PayPal, a bank, or pick somebody, doesn't mean it cannot be done this way. And also, compliance has changed dramatically over the last 8 years, especially because of technology, AI, and other things that came in. So I think us challenging all the time these 3 things allow us to really build a company and scale it fast and learn a lot of new things.
Good. What are the untapped markets as you see it for growth? And then, you know, these industries, do you sometimes stay out of a market that you think has a great potential if the regulatory framework's not right?
Yeah, well, so first of all, let's pick, you know, 2 markets that are extremely challenging from a regulatory framework perspective, China and India, right? Huge potential, endless amount of opportunity for sure, but so complicated from a regulatory perspective and no certainty. Like I compare it, for example, to Dubai, it's like day and night, right? It's just not comparable. So these are, for example, markets that, with all the respect to the huge opportunity, is just way too challenging from our perspective.
So you stay out, huh?
We stay out. So China, we always stayed out. It was super challenging. India, we were in for several years, and then we went out just because there were a lot of uncertainty in the things that were happening and how decisions are made, which was also another big element for us, why not to be in the market. On the other hand, when you look at where the opportunities, you know, Southeast Asia is an amazing region, right? You have Singapore, Malaysia, Indonesia, Thailand, Philippines, all these different markets, endless amount of people, technology, fast forwards, you know, jumping on top of card rails, on top of banks, mobile money, wallets, super interesting. Latin America, which is basically a market that is going through the digitalization process from cash to digital. And of course, this region, right? The Middle East, huge region, a lot of modernization, a lot of opportunity. A lot of things are changing, you know, over the last 10 years and will continue to change. So these are the markets where the real growth is coming from.
Good. I want to talk to you about the fintech sector and its growth and how AI dovetails with that. But I wanted to spend one more question on the concept around the class of like how do you build the ecosystem of an economy like the UAE? It had its traditional pillars, right? Trade, tourism, financial services, energy, and that it's evolving quickly. I found very impressive when I went to Israel probably 10 times over the last 20 years, the ability to be a small country that's nimble and embraces technology and the link between the training in defense and how they end up in technology. Is it an advantage to be small and nimble and be able to see different changes in the market and you can react accordingly? Or am I overplaying it?
No, you're not overplaying it, and it's not even related to a country. It's even related and reflected extremely well in a company. If you're a startup company between 5 people to 150 people is very fast, is very nimble, can execute extremely fast, achieve amazing things. Above 150 people, you're starting to become slow. Above 500, 600 people, it's becoming painfully slow, right? And it's the same thing almost in everything that you do. Like when you have small number of people that are very high quality, that are making decisions and can execute fast, you know, everything moves extremely fast. Unfortunately, at a certain stage, any company needs more and more people to join because the business scales, and then hierarchy, the way that things are managed, decision making, and also, by the way, the appetite of people of being aggressive and being successful is different in a big group of people that has an impact.
So how are you dealing with it as a CEO? Because the company's growing rapidly.
I cry every day. I cry at night. It's
you
painful.
Cry at night?
I cry, yeah. I will tell you why. Because it's like you want always to win, right? There are people that always want to win. Doesn't matter if I play against my kids' cards, I play sports, or I do business, right? I want to win. Some people, they come to the office, they want to get their paycheck and they want to go home. Now, it's a very different approach. Now, in every organization, at a certain stage, you always have these type of people. It's a mix, because you cannot always find people that want to win, because these people want to have their own companies, they want to be managers, You cannot fit everybody. It's very hard to try and keep the DNA, and like I said, up until 150 people, you can control it. Above that, you need basically to try and create this never-going craziness that will exist inside the company to move everybody. Some people survive it, some people don't. I have a very good explanation of what type of people I'm looking for. There are two types of people that go on a roller coaster, and the roller coaster at the end of the day is a startup company. The ones that like it, and the ones that will puke at you in the middle of the roller coaster ride. You don't want the one that will puke at you, right? That's it.
Good. How many people do you have in the company today, though?
800 plus, and now we're closing an acquisition. We're going to be like 1,600 plus. So it's a very big company already.
No wonder you're crying at night. It's
I'm
outside
crying,
your
yeah.
comfort zone.
Yeah,
by a factor of what, 15 almost?
Yeah, it's big.
Okay. How is FinTech going to change here, and what does it mean for Rapyd? We're past the hype. You see a lot of M&A taking place. There's a much more discipline in the system for profitability. What's it meant for you?
It meant a lot, right? We changed from growth at all cost, right? Growing faster, clients, employees, and volumes and revenues, but less focused on margins, profitability. Then came in 2022, the majority of the thing changed. It's very hard to shift this behavior, right? Because it's like a train that is running extremely fast into one direction. You need to stop it and you need to shift it to a different direction.
Because of the cost of borrowing, is that right?
It's the cost of running the operation, is the type of people that you hire, is the type of clients that you go after. Because in the past, a client is a client. Doesn't matter if the margin is 10% or 50% margin. As long as there is a client and there is revenue, you sign it. When you're focused on profitability, margins, and operational efficiency, you cannot take every client that comes into the door and you have an interest to say. You need to have the margins, you need to be lean operationally. So it changed dramatically, the mindset in the company, and also for me as the CEO of what things we should focus on and what type of things we should do, almost in every aspect, right? It starts from small things in the canteen all the way to how you treat a client and what type of clients you will want to sign. I think that, we've done a massive shift of 180 degrees, in the way that the company operates. It took us probably a year and a half, but now, we operate extremely efficiently. The clients that we're taking are very high quality. The margins are there, the profitability is here. So it's been a hell of a ride, but we're there.
Interesting. I was making the analogy in the previous panel that I was doing that this is a phenomenal festival because it has a combination of the suits and those in shirts, and we have it here on the stage today.
Yeah.
So those who come from traditional banking, we've had a lot of regulators that are here trying to scope the landscape in their country. They'd like to see what Dubai is doing vis-a-vis Cambodia or Austria in the last panel. How do you blend the two? Because you don't want to be over-regulated. So what is the message to the suits here today who say a lot of growth, a lot of job creation, a lot of opportunity, a lot of innovation? How do you get the touch right in regulation, in your view?
I think that regulation is extremely important, right? As long as it is done in the right way, but it's super important because in this space you touch people's money. So regulation is mandatory because any small mistake, you basically lose people's money, and literally the most important thing that they have in their life or in the business, right, is the money. So I think the regulation is important. The only thing I would say to regulators globally is you need to believe more in tech. A lot of regulators talk about fintech, sandbox, technology, but they don't believe in it, because when the tech company comes in and actually presents the fact that, oh, we can do this with the computer, we have AI, we have machine learning, we have whatever, people nod with their head, people write in their notebook, and then they say, no, you cannot do that because your compliance team needs another 200 people to monitor that, right? So you scratch your head and you say, okay, just explain to you why I don't. So I think that believing in tech, similar to what Dubai does, is the important thing. I know it's a process, right? Nobody will believe overnight that a computer can do it, exactly like you're not going to go into a self-driving car and let it take you whenever you want. But a little bit more belief will make a difference.
Oh, it's fascinating. How is your product line going to change then if the fintech industry, let's just take a pause here, we're in 2024, and we're going to look out 10 years, so that by the mid-2030s, I'm not asking for the size of the company, but what are you looking at in terms of innovation or products for Rapyd?
So a lot of AI around transaction monitoring, operations, and compliance. You know, people don't understand. It sounds like a buzzword, but it's not. Like the amount of manual labor that exists in companies in payments, even in a company like a Rapyd or an Adyen or a Stripe, or doesn't matter which new generation payments company or fintech company you pick, there is still a lot of manual labor. There are things that has to be reviewed manually, checked, and there are always this cat and mouse game about trying and automating things. And I think that the industry is going to go through a massive change in the next 8 to 10 years around the usage of AI, around operations compliance, financial operations, transaction monitoring. It's going to change completely, you know, the way that financial services operates.
Good. Is AI too hyped when it comes to your wallet? Is there a lot of potential to integrate it, to make it more efficient?
There is huge amount of potential. We invest quite a lot of effort from an engineering and product perspective in automating a lot of, you know, operational related tasks and money movement related tasks that are part of our platform. AI is always a big part of it. By the way, it was always a part of it even before it was called AI. People called it in a lot of different names. Now AI is the buzz. Fine, we'll call it AI, whatever you want. As long as the valuation goes up, I'm in it. But, you know, it's part of the game.
Good. The one question we didn't drill into, though, is that are you going to change your products as fintech evolves or not? Do you need to stay with the suite of the wallet that you have today?
The wallet is the future, right? At the end of the day, you can see everybody here is either a user of an Apple Pay, a Google Pay, a Samsung Pay. You use PayPal. You know, 10 years ago, you only had PayPal, but nobody thought, you know, they will have a wallet in their pocket. There was a dream about it, but now it became reality. I think that the wallets, at the end of the day, are a type of the future. And also for businesses. A lot of people think that wallet is only a consumer thing, and they miss the big picture. I don't know if people in this room know, but, you know, e-commerce is a giant technology of like $6 trillion a year. But B2B payments is $160 trillion a year, right? So wallets are a big part of the future also in B2B, and it's going to be basically embedded almost in anything that we do.
So which segments of the market are you trying to capture? Is it the SMEs in these fast-growing markets?
Actually, the SME is a very challenging topic because the small clients, the micro merchants, and really the S in the SME are type of clients that it's very hard to make money on them unless you're in a very large scale. On the other hand, if you're serving mid-market and enterprise, which is pretty much the space where Rapyd is in, this is where we're extremely focused, and this is where our product suite has the best product market fit.
Very interesting. Who wins the game at AI right now? I know there's quite a bit of discussion of trying to regulate it, and I'd love to get a CEO's perspective. And you know, some people in the industry here said, like, you know, the UAE is quite unique because it straddles east and west, and it's pretty neutral. I know Rishi Sunak was in Washington meeting with Joe Biden saying, oh, we're going to be the regulatory hub. I don't see that happening with China, right? Yeah, you had the same reaction. Yeah. Do we need a center for regulation? I'd love to hear your perspective.
There has to be a regulation behind AI just because how dangerous it is. Like, you can literally now pick up the phone, call the bank, and the machine is going to basically mimic your voice and your requests, and the bank, based on all voice recognition technologies and stuff like this, is going to approve the machine to move the money from your bank account to somebody else's bank account, right? So, and that's only the beginning. There's like a zillion other things that can happen with AI that is able to do things. So regulation is mandatory. I just don't see one, you know, global regulator for AI, right? It's just, it has to be a little bit more like in financial services. Probably some countries will allow more, some countries will allow less.
Interesting.
But it requires regulation for sure because the level of fraud that can be done in this space is just insane.
Good. What is the number one trend as we wrap up here that anybody in this audience should be listening or looking out for in this space of fintech that you're excited about?
In fintech, I think that the battle of the big brands to become payment methods. Apple and Google, you know, became payment methods. Everybody's
I didn't understand you, so go ahead.
The big brands all want to become payment methods. That's the trend, right? And it's a little bit slowed down because of the macroeconomical situation, but everybody was trying and still trying to launch their own wallet/payment product. You have Amazon Pay, you have Google Pay, you have Samsung Pay, you have Grab Pay in Asia. Like everybody wants to become a payment method, and I think this is what will turn fintech infrastructure, which is the space where Rapyd plays, into a very hot space, because anybody that wants to become a payment method or to be a wallet is not able to build the entire infrastructure and get regulated in order to do it. So it has to partner with some other companies that has the infrastructure, and I think this is the trend, and this is what's going to happen.
Good. We're out of time, but isn't there a danger, like the big 5 technology companies of the world trying to swallow this business up, and that's the scale of
There is, but on the other end, Visa and MasterCard already swallowed it,
yes.
right? So they're a monopoly on their own, so I don't see any big danger of the big 5 tech companies coming in.
Good. If I have this conversation in 10 years, are you still going to be Rapyd, or are you going to be a Target?
No, we're playing Pac-Man, we're Rapyd.
It's a pleasure to meet you. It was like speed dating with Arik Shtilman on how to run a company, but I get the same impression. You run the company the same way. You're moving fast.
Pretty much, yeah.
Nice round of applause. Nice to see you.
Thank you very much.
Very good.